Hello everyone! Welcome to my video presentation. My name is Givenchy Indi Muskita with my student house number is 354. The video is now going to discuss the method of accounting for trade records. This presentation will include several expert opinions as well as research to explain how the method of record keeping of trade in accounting is effective. Inventory is an important asset in the trading and manufacturing company. Accurate recording of trade goods is crucial to producing reliable financial statements and supporting proper business decision-making. Items are items purchased for the purpose of resale without changing its shape or nature. According to Kieso, Wigan, and Warfield, supplies are available to sell in normal business activities, in production, or in the form of materials or equipment to be used in the production or delivery process. There are two methods of logging of trade commonly used in accounting practice. One, periodic method. This method does not record any mutation of merchandise constantly. The final supply value is determined by physical calculation at the end of the accounting period. Characteristic of the periodic method: the purchase of merchandise is recorded in the purchase account rather than the supply account. The purchase fee was recorded in a separate account of the purchase lot. The repurchasing and purchase pieces are recorded in individual accounts as the restructures. The principal price of new sales is calculated at the end of the period with the formula: the stock of sales equal early supply plus net purchase means final supply. 2. Perpetual methods. These methods record its trading mutation on a continuous basis, so the supply balance can be known at any time without requiring physical calculation. Characteristic of the perpetual method: each purchase of merchandise was promptly recorded as adding and supply account. Each sale is noted with two journals in which the revenue of sales is recorded and the supply reduction and the additional prices of sales are added. The supply card is used to log in and out of the items in detail. The system enables real-time supply monitoring. Horngrain, Harrison, and Oliver explained that the method of perpetual provides more accurate and up-to-date information on supply levels, facilitated internal control, and assisted management in decision-making. The weakness is that it requires a more complex keeping system and higher implementation costs, especially for a company with a large transaction volume. Expert opinion from Donald Chieso, Jerry Wagan, and Terry Warfield in the book Intermediate Accounting state that the casting of supply methods should account for their particular business, volume of transaction, and need for information management. They point out that the method of perpetual popularity continues with the advancement of information technology that facilitates automatic logging. According to Warren, Reeve, and Duhak, periodic methods have an advantage in lower recorded simplicity and administrative costs. But the drawback is being unable to know the value of the supply and the principal price of the sale at times, having difficulty detecting loss or damage of the goods, and lacking in the strong internal control. Expert opinion from Charles Horngrain, known as management accounting, underscores the importance of a supply system supporting strategic decision making. Eldon Hendrickson and Michael van Breda, in the accounting theory, explain that the preferred supply record method must be consistent with a similar principal concept, where costs should be recognized at the same period of income generated. Research conducted by Muklassin on an analysis of the perpetual supply system of trade found that the company applying the perpetual method has 35% higher logistical levels than those employed by periodic methods. The study also shows that method of perpetual can reduce loss or damage to property by 28%. International research by DeLiu and Weirs published in the Journal of Operation Management show that the application of the perpetual teach system can increase supply accuracy by 99%, reduce stock out by 65%, and increase customer satisfaction significantly. Luca Pacioli, known as accounting officer or father of accounting, Pacioli was the Italian mathematician who first recorded the double-entry bookkeeping system in his book Summa de Arithmetica Geometri Pacia. Although it does not specifically discuss the method of modern provision keeping, the basic concept it laid the foundation for the development of the supply accounting system. Second is William Morse Cole, American accountant and academic who developed the concept of cost accounting and contribute the significantly to the accounting of manufacturing supplies. His work helped integrate inventory accounting with the production cost system. The third of Eric Kohler, the author of a dictionary for measurement, which is the standard reference in the accounting terminology, including the inventories, related definition, and concepts. Kohler provided a clear conceptual framework for understanding the various aspects of supply accounting. And next, Professor Charles Horngren. She is professor of Stanford University, known as the forerunner of modern management accounting. Horngren emphasizes the importance of supplies information for strategic decision making and integrating inventory accounting concept with operational management. The last is Eliyahu Goldratt, creator theory of ins and outer of the goal. Goldratt revolutionized the talk of inventory management with the concept of buffer management and its criticism of the traditional approach that resulted in inventory. So, the conclusion of all these methods of login are fundamental aspects of accounting that continue to grow as technology advances and change in business needs. Each of the periodic and perpetual methods has characteristic, advantage, and weakness that need to be understood for appropriate election in the corporate context. Studies show that the perpetual methods offer significant superiority in terms of accuracy, control, and operational efficiency, especially with modern technology behind it. But implementation requires careful consideration of such factors as cost, human resource, and technological infrastructure. I hope you found this presentation helpful and information. Thank you for your time and attention. Bye bye.